Hello, very good morning to all. I hope that you all have a great restful visa day yesterday. And very good morning. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Today will be the Thursday, the 23rd of May 2024. So before we jump straight into today's Daily Dose of Market Insights, let's have a quick look at the disclaimer slides first, as usual. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook, I want to share with you a quick recap of what has taken shape yesterday and as well as today's Asia session in terms of the cross-asset prices performance and as well as their respective economic data and as well as news flow. So let us start with the performance of the major US stock indices first. So we know that yesterday, before the close of the US session, the major US stock indices was rather lackluster. They actually ended almost as close to negative 0.4% to negative 0.3%. And what's interesting over here is that towards the end of the US session, there's actually a slight recovery by the S&P 500. It only ended above the intraday low at a daily loss of negative 0.27%. The top performer was the Nasdaq 100, almost unchanged at negative 0.05%, shrugging off from its intraday low of a loss of as close as negative 0.4% initially, before almost recovering towards the close of the US session. So the one that is underperforming was due to the Dow Jones Industrial Average, down negative 0.5% at the close of the US session, but also managed to inch up higher from its intraday low that was registered earlier around 2 a.m. Singapore time. And what we could see over here is that, very interestingly, right now as we are speaking, both the S&P and the E-mini, the S&P futures and the Nasdaq E-mini futures, all of them rallied very strongly, up 0.7% and up 0.4%. And the reason why is due to this very strong, robust earnings release from NVIDIA. So those who actually follow our daily dose of market insights since before we go for our Visa Day break, I've been stressing that NVIDIA is a very important a key element if you are actually looking at the S&P 500, the Nasdaq 100. Why? Because this NVIDIA is the third biggest weightage stocks inside the S&P and the Nasdaq 100. Whatever the price movement will have a significant impact on the movement of the Nasdaq 100 and as well as the S&P 500. So what causes this price movement to jerk up higher as we are speaking right now on the S&P 500 and the Nasdaq 100 futures is due to this very strong, robust earnings release from NVIDIA at the close of the US session. And what's interesting over here is that the release of the NVIDIA result happened after 4 a.m. Singapore time. But just now I shared with you what's interesting over here is that ahead of the close of the US session, both the S&P and the Nasdaq 100 managed to actually inch up above the intraday low. All right, so back to NVIDIA again. All right, so NVIDIA, okay, what's market like is actually they actually developed a very strong earnings beat. Okay, they beat expectation in their Q1 earnings, and also their forward-looking guidance for Q2 for revenue 28 billion. Right, surpass analyst expectation of 26.8. So that is actually a slight jump in terms of forward guidance. That's positive. And what's interesting over here is that, yeah, this is the very strong earnings revenue. All right, you look at the steep move over here, indicating to us that there's very high demand of NVIDIA specialized AI related chips. Okay, and what's interesting over here, they also announced this 10-for-1 stock split as well. So going forward, NVIDIA share will be split by every 10 share, it was split 10 to 1. So the share price will actually put it away that the share price will technically be lesser by an increased float. So that could also potentially create demand as well, okay, for NVIDIA. So that is a very, very positive, we call it number one, earnings beat, positive earnings guidance, revenue guidance for Q2, and as well as a positive, we call it float, where the price of NVIDIA indirectly will be deemed as cheaper due to the 10 to 1 stock split, increase the float, and there could be a positive feedback loop back to NVIDIA shares in the after hours, where it actually rallied up by positive 6%. Later I'll show you the technical chart due to these three positive elements in inhibited NVIDIA. Then, like I said earlier, NVIDIA being a very important driver of the return of the S&P 500 and the Nasdaq 100. Why? Because it's the third biggest component stock inside these two indices, and it also create this positive feedback loop back into the current futures pricing right now that is quoting on the E-mini S&P 500 and the Nasdaq 100 E-mini. That's both up by 0.4% and 0.6% that I explained to you earlier, like I showed you earlier. And that could also create another round of positive feedback loop into AI related stocks, chip stocks. That means any particular global stock indices that has a significant weightage in semiconductor chips could benefit from this we call it catalyst that's being kickstarted from NVIDIA positive price movement. Okay, so that I want to share, that I want to stress for you. Okay, and also as well, given that another fundamental news catalyst that took shape yesterday is the dollar index. So the dollar index movement yesterday rallied. If you look at the dollar strength coming back, so I've been so stressing this since the start of this week that yes, despite the fact that the last few weeks we see a bit of dollar weakness, but the dollar remains on a support level where we could see a bit of rebound taking shape. So yesterday, the euro dollar sold off is one of the underperformer of against the US dollar, that causing the US dollar index, let me share with you all, to actually continue to rise to almost to a week high, bouncing off from a key medium-term support at the 104.20 level, which is so the 20-day 200-day moving average over here. Okay, so this is the dollar index, okay, the US dollar index. All right, so right now there's some form of support coming back to support this at least a short-term dollar strength story. And what is the catalyst of this short-term dollar strength story that has been played out yesterday is due to the US Federal Reserve minutes. So it kind of reiterate the current slew of Federal Reserve officials thought, the thinking process, saying that officials are actually liking for this higher for longer interest rates in US, and as well as they also question if the current policy is restrictive enough. And also there's actually another person that's key personnel that is Goldman Sachs CEO Solomon. He did mention is public. Okay, where is it? Sorry about that. I think it's here. Okay, it's in my another. Okay, let me open up. Okay, it's over here. I think it's okay. This NVIDIA, which I already highlighted. Okay, I want to highlight. Okay, very quickly. Okay, yeah, this is the one. Okay, so Goldman CEO, which is a key personnel in Wall Street speak. He did mention yesterday in his public speeches that he do not expect any interest rate cuts this year, zero rate cuts for 2024. All right, so that also lead to this short-term dollar strength story that was seen yesterday. And overall, despite all this kind of a rather less dovish train of thoughts that's being portrayed in the markets based on the CME Fed Watch 2, market participants from the short-term interest rate futures market, that means the Fed funds future market, they are still looking for a first interest rate cut to come in September by looking at this CME Fed Watch 2, the aggregate accumulating we call it the accumulated meeting probability. So for the September meeting, based on the interest rate, the Fed funds interest rate futures market participants are still looking for a chance of a 66% chance of the first interest rate cut to come in the September meeting this year. The current Fed fund rate is at 5. This is the horizontal line here is the current Fed funds rate, 5.25% to 5.5%. The next one over here, 5% to 5.25%. 66 probability, that means market is looking for a 25% basis point cut to come in the September meeting. Then thereafter, no change for the November meeting, and a slight chance of 54%, slightly above 50, for another interest rate cut to come in the December meeting. That is 18th of December over here before 2024 ends. So that's around a slight chance only. Why? Because it's 54%. And why? To bring it down to 4.7% to 5% on the Fed funds. This is the Fed funds interest rate. All right, so the market pricing is still roughly the same, but the probability has starts to reduce on the second interest rate cut in December, so only slightly above 50%. All right, so this is the current situation right now that is actually playing out on the FX market. A bit of dollar strength. So with that dollar strength coming back, we do see we saw gold price actually plunging below the 2004 level. Actually went down slightly more than 1% yesterday. So that causes the dollar to actually that dollar, pardon me, that dollar strength being an inverse correlation with gold, so that causes gold price to actually slide yesterday by slightly about 1% or so, okay, breaking below that psychological 2004 level, that XAU/USD. And also yesterday we do see this WTI crude oil price breaking below that 78.40 key medium-term pivotal support. You do have a daily close below that level. That show the technical elements chart. Why? Because yesterday, due to the EIA US crude oil supply stockpile. So for yesterday's EIA supply data, this weekly stockpile change for the week ending ending May 17, it actually increases rather than decline, because the market actually expecting a decline of stockpile of negative 2.55%, but actually yesterday it shows an increase in the stockpile supply to 1.82 million, not percent, a million barrel. All right, so market initially is looking for 2.55 million barrel decline, pretty much in line with the pace what that was seen in the prior week of negative 2.5%. So however, it came in way above expectation of an increase in stockpile of 1.82 million. All right, so if you look at the trend over here, okay, there's an increase in the stockpile yesterday. All right, now, and also another economic data I highlight to you all yesterday is due to this UK CPI. So UK CPI came down lower, below the previous month of 4.2% year on year. It came in at 3.9% year on year, but slightly above market expectation of 3.6%. But if you look at the core trend in the inflationary level, is clearly deceleration, much more pace. The deceleration pace is much more steeper as compared into the US, 3.9%. So at being 3.9%, this is the lowest level since October 2021. So that being in mind over here is that this particular pace of deceleration in the UK core inflation rate for April is more or less in line with the thoughts of Bank of England officials. And you recall that the previous Bank of England officials, they're actually in favor of cutting interest rates pretty soon in June, very similar to ECB. So what's interesting over here is that another side of economic, the data services inflation, which is the subcomponent of the CPI data, also decelerate as well in April to 5.9% over here. So if you look at the 5-year trend, it's clearly inching downwards. So what's interesting over here is that yesterday, the sterling dollar, if you look at the sterling dollar over here, based on this. Yeah, this is a 5-day. The sterling dollar was rather stable against the US dollar. So in fact, it did actually depreciate against the US dollar. That means, i.e., there is not much US dollar strength that is being expressed in the sterling dollar yesterday, and based also on the 5-day rolling performance. Why? Because of the news that UK is going into election on the 4th of July. All right. So the current PM actually called for a UK surprise general election on the 4th of July. Okay, over here. Okay. So that being said, that the next BOE meeting, the Bank of England meeting, will be on the 20th of June, roughly only about a week or so away from the 4th of July surprise US upcoming general election. And being apolitical, the Bank of England will be roughly unlikely to cut interest rate before a general election. Okay, so that actually reduced the chance, the probability of an interest rate cut in the upcoming June meeting, despite the fact that fundamentals in UK actually supports for that, because due to a political situation right now, the Bank of England do not want to be seen as swaying towards the current UK administration to enact an interest rate cut before the 4th of July meeting. So that actually explained why the sterling dollar yesterday was not so why the dollar is not strengthening so much against the sterling yesterday. It's more of a sideways configuration. So later I'll share with you all the technical chart, but in fact the sterling dollar still remains on the resistance level at the 1.2720, 1.2740 level. All right, so that pretty much sum up for the fundamental and the intermarket analysis. I'll share with you all. Okay, I'll share with you all. Okay, so now let us now straight jump to the short-term technical outlook, starting from the major stock indices first. So let us start with the Asia Pacific currency, which is the Hong Kong 33. Okay, so the Hong Kong 33 yesterday plunges lower. It break below that short-term pivotal support that we highlighted earlier at around the 8-9, around this level over here, the 19,100 level previously, and it plunged lower. And what's interesting over here is that it's now coming very close to the 20-day moving average. There's, I think, a support at around 18,460. And if you do the current Fibo retracement over here, okay, it's a bit lagging. Okay, let me draw again the Fibo retracement. Okay, it's around the 38.2% Fibo retracement, slightly above it. Okay, so, and also the price action on the RSI has already starts to inch up higher from the oversold region. So with that, right, given the fact that it really fallen and it's coming very close to this bunch of next support level, I do not want to actually be bearish. Why? Because it's coming very close to it, and given the fact that the short-term uptrend and the medium-term uptrend is still pretty much intact, because price action is still trading above the 20 and the 50-day moving average, and as well as the 20-day moving average is above the 50-day moving average as well, indicating to us the short and medium-term uptrend is still intact. So given price action is coming very close to the next near-term support level, we are having a bullish bias for today. 18,460 will be the short-term pivotal support level to maintain this today's bullish bias on the Hong Kong 33 index over here. The first resistance to watch will be very close to yesterday's swing high area at 19,400 level. Above 19,400 level may expose us to the next near-term resistance level, which is the current high, swing high of last Friday at 19,790 level / 19,980 level. Okay, only an hourly close below 18,470 will see the extension of this minor corrective decline to expose the next near-term support at 18,240, followed by 17,895 level, which is the 50% Fibo retracement of that up move from 19th of April to last Friday swing high. Okay, so that's for the Hong Kong 33 index. All right, so before we that, let me hide myself so that the screen can expand. Yeah, okay, good. So now let us look at the next Asia Pacific major stock indices, which is the Nikkei 225. So this is the Japan 225 or the Nikkei 225. So the Nikkei 225, what you see yesterday is a bit of whipsaw. It managed to came down, break below the 38.975 short-term pivotal support level that I highlighted before the Visa Day break on Tuesday. It came down, hit the next support level at 38,460 before 38,500 data deposit before it bounced. And where it bounced, right, very interestingly over here, this strong bounce, it bounced off right exactly at the 20-day moving average, I think as a support level, and as well as this minor trend line, ascending trend line that I drew from the low of 19th of April. So there is two key strong technical elements that is supporting this bounce. And with that, the RSI also starts to shape a very strong push up after hitting the oversold level yesterday. And right now it's actually now breaking back above the 38,975 level. Okay, so it really broke out this level. Okay, and also surpassed back above the 50-day moving average, indicating to us that the bullish tone has started to come back into the Japan 225 after yesterday's slide. Okay, so with that, we will still maintain a short-term bullish bias for today on the Japan 225, definitely for sure using the 38,460 as the short-term pivotal support level. First resistance to watch will be that 39,500 level, which was this Monday's push-up before that slide occurred during yesterday's Visa Day session. Above 39,500 exposes 39,810, 39,990, which is the minor swing high area of 4th of April and as well as 12th of April. Only an hourly close below 38,460 will invalidate this bullish bias for today to see another round of choppy corrective decline to expose the next near-term support level at 38,300, followed by 38,015 level. Okay, now back to the German 30 European currency. So same as well, strong bounce off on the German 30 during right now as we are speaking. Also testing that 39,640 short-term pivotal support yesterday. Okay, so there's a slight excess below over here. Yesterday low was 18,590. Okay, so that was yesterday's low. So we do have a bit of excess over here. But where it bounced, it bounced off exactly at also the minor ascending channel support that I drew from the low of 19th of April. And if you do the Fibo retracement, we're taking into account the last push. Okay, it's so close to the 23% Fibo retracement, right? So with that, having a bit of excess at 18,590, so I give a bit of slash over here, 645,590. Okay. Okay, so still maintain that short-term bullish bias on the German 30, 18,640/590 with the short-term pivotal support level. First resistance to watch for sure will be the current okay, so first resistance to watch I will use, because since it's a very short-term technical outlook for today, it's an intraday outlook, so will be Monday's high at 18,815. Above 18,815 potentially sees a retest at the current all-time high area at 18,920. Only an hourly close below 18,590 will negate the bullish tone to see the extension of this minor corrective decline to retest the 20-day moving average, adding a support at 18,470. A break below 18,470 exposes the next support area at 18,320. Former minor swing high of 24th of April, and as well as the 50-day moving average also confluencing at 18,320. Okay, so that's for the German 30. US Wall Street 30, Dow Jones. So this where Dow Jones Industrial Average, the US Wall Street 30 quant platform, managed to hit exactly at the short-term pivotal support that we highlighted, 39,600 short-term pivotal support, no change, bounce off from this level. And what's interesting over here is that the RSI also managed to inch higher as well, okay, from the oversold region. So net still maintain that short-term bullish bias as long as 39,600 short-term pivotal support holds. First resistance to watch will be the current all-time high area at 40,050. Above it exposes 40,360/40,430, which is a cluster of Fibo extension level. Only hourly close below 39,600 will invalidate this short-term bullish bias on the US Wall Street 30 to see the extension of this minor corrective decline to expose the next near-term support at 39,260, followed by 38,970, which confluence with the upward sloping 50-day and the 20-day moving average. Nasdaq 100, the strongest among the major US indices. Why? Because of Nvidia positive exposed earnings result release. So hitting the first resistance already at 18,850 level. Okay, so what I'm going to share with you all right now over here is that why Nvidia price actually is so positive. Quickly, let's go to the chart of Nvidia again, which I really shared on Tuesday. Okay, ahead. All right, a prep ahead. So what I could see over here is that Nvidia price going to be very, very positive. Like share trading above the 20-day move, the 50-day moving average over here at 877 level. First resistance at 1070 has already been met during the pre-session, the what I call it, the after hours trading session. You know that US stocks, they actually traded in the after hours as well during a short period of time after the close of the US session at 4 a.m. Singapore time. So how do I know that? Very quickly, if I go to the hourly chart of Nvidia, we could see this is the after hour trading session. Okay, so this is the spike up over here, 4 a.m. up to 6 a.m. Singapore time, hitting the 114.25 resistance level. Okay, this strong. Okay, let me so I could share, expand it. Yeah, this bounce. This particular, this little box, we call it blue shaded blue area. Yeah, this is the after trading hours of Nvidia. The bounce off hit the resistance at 104.14, 2075. So no clear signs of any exhaustion yet over here. All right, and if you very quickly you go to the daily time frame, the RSI is also hasn't hit the overbought region. All right, okay, so with that, right, that could actually continue that's why we start to see that ongoing positive feedback loop into the Nasdaq 100. Yeah, over here. So first resistance is at 18,850. The next resistance to watch will be at 18,990 slash 19,055 level. So this level has already been met over here, followed by 19,160 slash 180. So still maintain that short-term bullish bias, but I will have a tighten key short-term pivotal support for today. Okay, so this will be the first support level to watch in case of any pullback, but this level I don't put it so tight at 18,740. Just care with. So I will use yesterday's low, okay, at this 18,575 level. Okay, so this level I will remove here. Okay, let me adjust everything so that you guys have a better view. Okay, 18,580. Okay, so this will be my Titan key short-term pivotal support level. So this will be the next support level. Settings. Okay. Okay, let me tidy up for a while. 18,230. Okay, so for the Nasdaq 100, no change, still maintain that short-term bullish bias, but potentially there could be a minor pullback given the RSI is at the extreme, haven't hit the extreme overbought level yet. Extreme overbought level was here at 87 previously, haven't hit the overbought level. There could be a minor pullback. First support level to watch 18,740. As long as this pullback didn't surpass close to yesterday low, which is my Titan key short-term pivotal support for today, 18,580. Still maintain that short-term bullish bias inherent on the Nasdaq 100. Next resistance to watch 18,990 slash 19,055 FIBO extension level. That's how I define. Above it, top of the minor ascending accelerated channel that I drew from the low of 1st of May, also confluencing with a FIBO extension cluster level at 19,160, 19,180. Only hourly close below 18,580 will negate this bullish tone to see the extension of the minor corrective pullback to expose the next near-term support level 18,465. Below it exposes 18,230. All right, so to sum up everything, the major indices that I share with you all in that short-term technical outlook, elements are still positive. Then we will actually their current so-called intraday short-term uptrend phases remains intact. Now, very quickly, the FX pair, the major FX dollar pair. Let's start with the euro dollar. So the euro dollar inch down lower as expected, hit the first support level that we highlighted, 1.0825, and it also broke below the minor ascending channel support that I drew from the low of 1st of May. Okay, so with that, I would have a tightened key short-term pivotal resistance for today at 1.087. As long as this level is not surpassed, still maintain that short-term bearish bias on the euro dollar. Next support level to watch, 1.08. Below it exposes 1.077. Only an hourly close above 1.0870 will invalidate this short-term intraday bearish bias on the euro dollar, exposing a retest on the next resistance at 1.09. Above it sees 1.0925, 1.0940 intermediate resistance coming in thereafter. This is the sterling dollar that is traded kind of sideways yesterday because due to the fact that there is a low chance of the Bank of England to cut interest rate on their next meeting of 20th of June due to the upcoming 4th of July snap election that was declared yesterday by the current UK government because the Bank of England do not want to see it being very political to the current administration by helping them to actually boost growth ahead of the election at 4th of July. So what you could see over here is that yesterday it managed to struggle, but it can't break above the upper limit of this minor ascending channel that I drew from the low of 23rd of April. So with that, still no change, 12740/12760 short-term pivotal resistance level, but it got to break yesterday's minor swing low at 1.27 figure level, which is this bunch of minor congestion area here at the lower limit. A breakdown below 1.27 level will expose the next potential near-term support area to come in at 1.2640/1.2610, which also confluence closely to the 50-day moving average as well. And as well, I believe that is close to the 20-day as well. Below it, 1.2565. All right. Only an hourly close above 1.2760 will negate this short-term bearish tone to see a squeeze up towards 128 figure, followed by 12860. Okay, so that's for the sterling dollar. Now, quickly on the Aussie dollar. So what I could see over here is that the Aussie dollar yesterday has a bearish reaction, like I explained, right very close to the 67.30 level. So what this 67.30 level is actually the upper limit of this minor symmetrical triangle configuration. The Aussie dollar is being trapped on the daily chart since the low of 13th of October. So with that, quickly switch to the hourly time frame for our short-term intraday technical outlook for today. It broke down below the ascending channel support level, the minor ascending channel support level that I drew from the low of 19 April, and also hitting the first support level that we highlighted earlier at 66.45, 66.20. So this level has already been met over here. Okay, so right now what you could see over here is that the RSI now has started to exit from the oversold region, but the way it's exit over here, that prior to that there is no bearish divergence because price action shows lower low as well. Okay, in line with the price action of the of the Aussie dollar. Okay, so what I could see is that potentially now there could be a bounce. All right, a bounce coming back. So the bounce first resistance to watch out for will be this level here for sure. Will be yesterday's this particular congestion here. Okay, at 66.50 level. Potentially maximum 66.80, which will be my short-term pivotal resistance that I highlighted for today. Why this level? Because also the pullback of that former ascending channel support now turns into a pullback resistance. If I draw the Fibo retracement over here, we do it. It's also the 76.4% Fibo retracement as well. Okay, so as long as this bounce didn't surpass 66.80 level, we will still maintain the short-term bearish bias on the Aussie dollar. Next near-term support level to to watch, support level to watch will be at 65.85. Below it exposes 65.20, which is the 200-day moving average, and as well as the minor swing low area of 2nd of May and 3rd of May. Only an hourly close above 66.80 potentially sees a push up to retest the upper limit of that the medium-term symmetrical triangle resistance level, 65.50/67.80. That's for the Aussie dollar. Very quickly, the dollar yen. So the dollar yen continues to be trapped within this range over here. So what we could see is that I'll still maintain a short-term neutrality bias sideways range between this 157 figure level and 155.30 level. Okay, so over here there is no signs of a bearish divergence as well, because price action continues to trade higher. Okay, higher high. Okay, in price action of the RSI and the price action of the dollar moving in synchronous. It's just only as an overbought region. So given the fact that mixed element neutral between 157 and 155.30. Okay, so that's pretty much sum up for the FX market. So what we could see on the FX market over here is that the yesterday's minor dollar strength rebound or dollar strength revival still remains supported, but very mixed element on the dollar yen for now. Then with the dollar strength coming in, that actually causes gold price yesterday to actually plummet to be around, of course, yesterday the gold price was trading somewhere around here. So it actually plummeted close to about 1%. In fact, 2%, okay, based on the intraday low. So given this plunge in the gold prices, they're breaking below our short-term pivotal support at 2,395 level. So this will become a pivotal resistance for today, and also close to the pullback of this minor ascending channel. Former support turns into a pullback resistance level. So right now, spot gold is now doing a minor corrective pullback scenario to actually do a bit of retracement of that's 1.5 weeks of rally after that 1 week of rally that broke out from that former minor descending wedge bullish configuration. So the next support level to watch in this ongoing minor corrective pullback scenario will be the 2,355 level / 2,338 level, which is also confluence with the upward sloping 20-day moving average. A breakdown below 2,338 exposes 2,307. Overall, the medium-term uptrend still remains intact for spot gold XAU/USD. Just that right now, yesterday's push down, a break below that 2,395 level actually starts to more or less skew towards the odds of a minor corrective pullback within its short and medium-term uptrend scenario. Short and medium-term uptrend phases that are still intact. Why? Because price action is still trading above the 20-day moving average and the 50-day moving average, and the 20-day remains above the 50-day moving average. So right now for today, if we start to see an hourly close a rebound and broke hourly close back above 2,408 short-term pivotal resistance that I had today, then this minor corrective pullback will be more or less game over, and to see the revival of that potential bullish impulsive up move sequence again to potentially seek a retest on the current all-time high area at 2,450. Above it exposes 2,480/2,490. So very quickly, spot gold, as also that spot gold XAU/US/USD. Very quickly, West Texas crude oil. So yesterday's stronger than expected uptick in that US stockpile increase causes spot gold to causes West Texas oil to actually break below that medium-term pivotal support at 78.40, because it do yesterday finally it have a daily close below it. So previously, since the 3rd of May, it tested, bounce, didn't have a daily close before. Then yesterday it has a first daily close below it at 78.40. So I got to respect this bearish daily close. So indicating to us that right now, right, we are in the midst of this ongoing I would say that close to 2 months. So it's now start to unfold a kind of a multi-month corrective decline phase that is evolving in West Texas crude oil. Now potentially back down to retest 71.35 next, which is this major ascending trend line that I drew from the low of 20th of March. Okay, so it's now being congested in this very weird sideways configuration since 20th of March last year, with the next support at 71.35, which is a major one because it's this ongoing major ascending trend line that has been supporting previous sell-off since the low of 20th of March. Okay, supported over here, supported a couple of times in 30th of December last year, and since the start of this year from January to early February. Okay, 71.35. So in short term over here, what we could see over here is that potentially at this point in time, it could start to shape further lower low after breaking below this minor swing low area of 8th of May and 16th of May at 77.20, using a 79.25 as my short-term pivotal resistance for today. As long as this level is not surpassed, a break below 77.20 exposes the next near-term support area at 75.50 in the first step. Okay, this minor correction here. So, however, if we start to see the price action of West Texas Oil breaking above 79.25 again for today, then we will start to see another round of very messy choppy movement, potentially to see a retest at the 200-day moving average at 80.50 level. All right, so that's for West Texas crude oil. Switching more to a bearish bias in short term for today due to the daily close below of that 78.40 key medium-term pivotal support for the first time since early May this year. So that's pretty much sum up for today's short-term technical outlook on the various cross asset classes. So before we go, let's have a quick look at the calendar to see what are the key economic data to look out for today. All right, so today will be the Thursday over here. All right, so today will be flash PMI data releases. So what we could see over here is during the European session, we have a slew of Germany and France releasing at 3:30 p.m. Singapore time, both the flash manufacturing and services PMI for May. The Eurozone one will be slightly later at 4 p.m. Singapore time. Then followed by 4:30 p.m. we have the flash manufacturing and services PMI for UK coming in at 4:30 p.m. Singapore time. And as well as we do have it on the US session as well for the US at 9:45 p.m. Singapore time. Both the manufacturing and the services flash PMI will release for May. Okay, so but for US, very interestingly is that the market participants don't actually so far pay much attention to this S&P Compound Global Manufacturing PMI. They will actually focus more on the ISM Manufacturing and Services PMI that will be out a week, out around 2 weeks later. All right. Okay, so that pretty much sum up for today's. Yeah, there's no Fed speak for today. Okay, expect for another one very early Asia session tomorrow, 3 a.m. Singapore time, where Fed Bostic will be speaking. But more or less, we know that Bostic is one of the less dovish officials, so I believe that he will still reiterate his call of potentially watching very closely the key data in US point and still stressing there's still elevated inflation pressure and his choice of keeping rates at a higher level, okay, for a longer period. I think should be pretty much unchanged based on his rhetoric. So that could not be a major game changer. So game changer for tomorrow, especially on the dollar yen, will be at 7:30 a.m. Singapore time inflation rate. Okay, Japan inflation rate releasing at 7:30 a.m. Singapore time, and market expecting especially this one we are watching the inflation rate, core inflation rate in Japan. So Japan have a core inflation rate and a core. The core one will be very important. Why? Because this is where BOJ is watching. That's excluding food and energy. So market is actually expecting a softer number at 2.6% year-on-year to come in April. If this number came in slightly higher at 2.8% and will still matches last month figure of 2.9%, that could see a bit of dollar yen weakness coming into play on the market. And given the fact that like I shared with you all, the dollar yen is now trading slightly below the key range neutrality range resistance of that 157 figure level. All right, so with that please sum up today's daily dose of market insights. This is Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.